Hey there, this is Dr. Kirk Elliott, and there are some alarming trends that are happening in the financial world right now, and so I want to take about 10 minutes or so and go over that with you. I've basically titled this presentation, New Banking Policy Signaling a Potential Run on the Banks, because that's exactly what is happening. When you see some of the stuff that we're going to be looking over tonight, you're going to leave and think, oh my word, I've got to get my cash put into a safe place like pronto. And I think that you really do. So let's get started here. But first, I have to do a little bit of framework, a little bit of groundwork here to show why we are where we are. So we're going to look at a case study of Venezuela. Socialist Venezuela. Businesses are forced to lower prices to be fair to the lower classes or face arrest. So we have to ask ourselves, why in the world are prices going up? Is it because the merchants are just wanting to take advantage of the lower classes, or is it because the government has done something to cause inflation and make prices go higher? Well, the latter is the case. So how did this happen in Venezuela where they're forcing merchants to actually lower prices at gunpoint? Well, to provide stimulus for a collapsing economy, Venezuelan President Nicolas Maduro has adopted an inflationary policy that has increased stimulus to $900 million weekly. $900 million a week. So what do we have here in this country? Well, Janet Yellen has reduced our stimulus by $20 billion a month, but we've gone from $85 billion to $65 billion. Goodness. Just that reduction of $20 billion a month has caused the stock market to come down about 7% the first 6 weeks of this year. But what has happened, this inflationary policy in Venezuela caused prices to soar by 49.4%. And retailers were forced to raise their prices in response as their cost of goods purchased for resale went through the roof. So in a nutshell, we'll just boil this down to a few points. Since Hugo Chavez's death on March 5th of 2013, the bolivar has lost 62% of its value. In less than a year, it's down 2/3. So this in turn has brought about very high inflation in Venezuela, and then the government has responded by imposing even tougher price controls to suppress the inflation. Take a look at this chart. Up through October of 2012, the bolivar was actually pretty stable. Then it started falling like a rock. It has actually fallen off the cliff here. So it was this slide in the value of the currency that caused inflation to soar. Remember, the U.S. dollar has lost 98% of its value since 1913 when the Federal Reserve Act was instituted. 98% of its value. This slide has just happened within 1 year in Venezuela. So officially, inflation is at 49.4%. Unofficially, though, in Venezuela, inflation is at 300%. Why the discrepancy? Same reasons that we have here in this country. There's a propensity for governments to actually understate the official inflation rate because entitlements, Social Security, Medicare, Medicaid, and so forth, so many benefits are attached to the official rate of inflation that governments try to understate inflation so they don't have to pay out the nose for stuff. But the reality is inflation in Venezuela is really about 300%. So the price rise was due to irresponsible government printing of money. Does this sound familiar? It should, because we're having the same thing here. How did the government respond? President Maduro blamed rich businessmen and right-wing political foes backed by Washington of waging an economic war against him. President Maduro is threatening to force more stores to sell their merchandise at cut-rate prices. Again, does that response sound familiar? Yeah, because the same thing is happening here in America. So here's the crisis in pictures. Look at these guys on the bottom right of the screen. National armed guards in front of stores in Venezuela with semi-automatic or automatic rifles, and the people are going crazy. They are forcing the store owners to lower their prices or basically you'll die. I mean, good grief. It was the government that caused the prices to go up to begin with, not the store owners. But yet they have to appease the masses so you don't get what's happening in the top left of your screen, which is civil unrest and revolt and all kinds of outcry. So let's look at Argentina. Prices are soaring in Argentina. Foreign reserves are falling and the peso has had its sharpest slide in 12 years. But instead of rioting, Argentinians are falling back on tried and true survival skills learned in earlier turbulent times. What does this sound like? Preserve, protect, prepare for what's coming, survival skills. Because the inflation has happened in Argentina before. They learned their lesson. And so with inflation at about 30%, in Argentina, a 43-year-old geography teacher has used shopping sprees to beat further price rises. This is what she's done. She said, I might pay 1 peso for a product today, but next week I'll likely have to pay 2 pesos, as she left a supermarket pushing a trolley filled to the brim. So, in a nutshell, again, cause and effect in Argentina. Inflation is hovering at around 30%, but accelerating rapidly. The government's erratic decision-making is the biggest risk looming over the volatile peso, and the policies that triggered the currency crunch have only become more contradictory as the crisis unfolds. Due to the uncertainty of public policy and how to attack this crisis, the Argentinian peso fell 15% in just 1 week. 1 week of January 2014, it fell 15%. But as if that weren't bad enough, it's not the worst of it. The last 2 months of 2013, the peso collapsed 30%, and they're expecting a 50 to 60% further devaluation in 2014. So obviously, nothing was learned from history. A currency crisis occurred in 2001 where the peso lost 70% of its value. And what happened next wreaked havoc in the markets, created riots and social unrest. So what happened? Banks froze deposits and barricaded behind sheet metal as thousands of protesters unsuccessfully tried to withdraw their savings. Banks froze deposits. That's the key here. So, an 80-year-old retired journalist from Argentina says, we don't trust anything anymore, not even the banking institutions. I had saved in dollars, and when the banks froze deposits in 2001, I got pesos back and lost all my money. So when there's a threat of a bank run, banks freeze assets. That's a key axiom. When there's a threat of a bank run, they're going to freeze assets to prepare for what's coming. If they didn't, banks wouldn't have any money and the banking system would be shut down. So bank runs are actually imminent. This was just reported the first week of February by the BBC. The British Broadcasting Company. A number of HSBC customers. HSBC is a major global bank with huge operations in America. Their customers have recently been prevented from withdrawing larger sums of money because, and this is so disturbing to me, they could not provide evidence of why they wanted it. I've got the sources at the bottom of the screen here for you to see. So, in its essence, people with large deposits wanted to make a large withdrawal. The banker says, hey, why do you want the money? If they don't have a good reason for it, the bank is withholding it. Now, all of a sudden, the banks are viewing your money as theirs. So why would they do that? Because they probably need to keep money in the bank because they have to have policies in place because they're fearing a potential bank run. Capital controls, another issue that we need to look at. Again, HSBC and Chase have instituted capital controls. Clients need to wait a minimum of 5 days before wiring in funds, even to their own international accounts. If you're Joe Schmo, you have a Chase account in Manhattan and you have another Chase account in London, same bank, same client, just different countries, you have to wait a minimum of 5 days. But what's alarming about this policy? There's no maximum. They could withhold funds indefinitely. See, this is the very nature of capital controls, restricting the free flow of capital across borders until it is trapped inside the country and forcibly denominated into a rapidly devaluing currency. So this process of an increased welfare state causes governments to run out of money will result in a restriction of freedoms, leading to civil unrest and ultimately the collapse of a civilization. The policies we're seeing right now in banks, withholding people's assets and putting capital controls on them. When you start connecting the dots, why would they do something like that? Because of what's on the screen right now. They're restricting freedoms because they're afraid of money leaving the country. They're afraid of money leaving the banking system. But why? What do they know that we don't know? What do they think is coming that we don't think is coming? That's the alarming thing to me. So what makes this battle so difficult to win, though, is that it stems from a loss of virtue. There's a loss of character and a culture battle in this country. Those kind of battles are hard to win until rock bottom is hit. That means it's going to get worse before it gets better. But we must never give up the fight. There is hope in this message if we persist. Did the Roman Republic die? Yes, it did. Does Italy, Rome, and the people in that area still exist? Yes. Will we continue to exist too? Yes. Our freedoms may erode, but we can thrive. We were created to thrive. So what can we do? Do not let your guard down. This news, this information, this knowledge I'm passing on to you, you need to act on it. You need to act on it quickly and with boldness and with courage and with wisdom and discernment, so you don't let these policies that have some underlying issue behind them erode everything you've worked your entire life to accumulate. You need to vote. You need to get these clowns out of office, which we're all very active, but we need to be even more active so we get clowns out of office that are producing bad public policies that are going to destroy our currency. And we need to invest with a gusto in tangible assets like gold and silver. When the emperors in Rome debased the currency to pay for all the entitlements and the government expansion, the only thing left that was worth anything was tangible assets like gold and silver. The same is the case today. Protect and preserve is the name of the game. When banks start thinking your money is their money and they will not let you withdraw funds unless they approve of the use of funds, you know trouble is right around the corner. When banks freeze assets and impose capital controls, it's too late. The writing is on the wall. America is following the same path as the Roman Republic. As America debases its currency, just like Rome did, people now want out, but it's becoming increasingly difficult to do so because they're restricting withdrawals, because they're freezing accounts, because of capital controls. So take action now. Tangible assets like gold and silver will not only preserve and protect everything you've worked your entire life to accumulate from inflation, but they can also act as a barter item when merchants no longer want the currency in exchange for goods and services. Contact me for more information. Kirk at americasfinancialdoctor.com. Call me 866-211-8986. I'd love to talk to you. Look, the writing is on the wall. The window of opportunity is shutting. These policies are alarming to me. When it's hitting our banks, we need to take action and take action quickly. God bless. Bye-bye.